Now that you know you want to purchase a home, there are a few things you need to work on prior to purchasing. By doing these things, it will help you have the greatest chance to purchase within the timeline you have in mind. First, you need to get your credit health check early. When you apply for a loan, there are a few things the lender will be looking for. One of the key factors is your credit history. You don't have to have perfect credit, but you do have to show that you are a good risk to the bank. Now, warning, neither Credit Karma nor your bank's credit report system can be used to qualify you for a mortgage loan. Only the lender can let you know what works. Are they close? Yes. Is it a good gauge to help you along the way? Yes, but it is not the final decision, so don't get lulled in by thinking it is the right thing. Now, there is a minimum FICO score for each of the different types of loans. Most of them will prefer that you're at least around 620 or better, but there are a few programs that might go lower depending upon the situation. However, for the best interest rates, you will want to push that score as high as possible, especially if you can get to about 700 or above. Now, here are a few tips to helping you improve your credit score. You want to make payments, including your rent, credit cards, car loans, and everything on time. That's what they're looking for. You want to keep your credit card balances to less than 30% of your limit. If you can use them to charge and then pay off, even better, but you definitely want to get that under that 30% range. Next, you want to pay down those high balance credit cards to lower balances and consider balance transfers to free up credit. So once again, if you get them down to that 30%, it does the same thing, but some people will sometimes move them around. You want to check for errors on your credit report and work towards fixing them. We definitely recommend that you look at your credit report because there might be some things that you forgot about because they were like 5-6 years ago, but they're still going to pop up. You want to shop for mortgage rates within a 30-day window because if you have too many spread out inquiries, it can actually lower your score. And you want to work with a credit counselor or a lender to improve your score if needed. If you know you've got some stuff on there that needs to be cleaned up, I recommend definitely getting with a lender. The lender will let you know if they think that you should get with a credit counselor, but it's all fixable. Everything is fixable, and sometimes it's a lot easier than you think. The main thing that I tell people is you want to make sure that you partner with that lender because what you think you need to do and what they think you need to do are completely different. For example, you don't want to close down credit cards. That actually hurts you to close down credit cards. You would think that would help. It actually hurts your credit score. Now, by the way, the lender is also going to look at your job history. Normally, they look for 2 years on the job, or at least that you've been in the same job industry or you have a similar history for the last 2 years. And if you are self-employed, they are also going to be needing 2 years of your business history. In which case they may need the tax forms to also show that. Same thing with your job history. They may need your pay stubs at the same time. They want to be able to verify all of that stuff. Now, as far as the purchase funds that are needed, listen, there is no true no money down program. There are still funds that are needed. While at the end of the day, you may not need any funds based off of some programs, which we'll talk about throughout the course, there is money needed along the way. So don't think that there's not. More than likely, you're going to need about $2,000 to cover these items. For example, there's going to be inspections that are needed, an appraisal that is needed, and you will have some earnest money that you need to put down. But listen, if you were to move into a rental, you're going to need money as well for their security departments and everything else. So don't freak out. This is money that you're saving for your own home and not someone else's this time. Now, with that said, I do want to talk about a myth that is out there. You don't need 20% down to buy a house. Sure, you can do this, but most first-time home buyers use other programs that are out there. For example, there are FHA loans, and they require 3.5% down. And there are conventional loans that are out there that you can go as low as 5%. And of course, those of you that are veterans, you can have a VA loan, and those ones do go down to zero down typically. At the end of the day, your lender is going to let you know all the different types of loans that you may qualify for. Now, there are some government assistance programs that are out there, and these will help you with those down payments. They're not all the time. They do come and go. There are limited times, and there are some quirks that are to these. The thing is, the reality is many of these programs come at higher interest rates, and some will even have you pay back the money they give you if you move earlier than what it is signed up for. So for example, some have you have to stay in the home for 4 or 5 years. Otherwise, you have to pay back portions of that money. So you want to make sure that the lender goes over the fine print with you before you jump into one of these. You want to go into it with your eyes wide open, if you will. Now, let's just assume that you do qualify for a typical FHA loan. That's what most new first-time home buyers qualify for. And let's just say that you qualify for a home that's up to $200,000. And that means you need $7,000 down for your down payment. That's going to be 3.5% of the $200,000 is the $7,000. Now, you will also have some closing costs. This doesn't matter what type of loan you are, you're going to have some closing costs. And there's typically buyer closing costs and seller closing costs. The ones you want to worry about are your buyer closing costs. For example, you're going to have title fees. There's some fees that go along with the lender for getting the loan. There's loan fees. There's all kinds of miscellaneous little fees that add up. Now, you can count on these fees running you anywhere between $5,000 and $7,000 on average. A typical rule of thumb is it's going to run you about 3% of your purchase price, give or take. But here's some good news. In some cases, we might be able to negotiate with the seller to give you a credit that can be applied towards these closing costs. So for example, we can ask for 3% or ask for $5,000 as a credit, in which case this will reduce that number by whatever number the agent's able to get you. Now, keep in mind this comes at a cost. You may have to pay closer to full price in order for them to give you this, because at the end of the day, it is still coming out of their net proceeds. So they're not going to want to give you a discount on the house and give you closing costs. Your agent should be able to walk you through what this looks like, but I'm not saying you can't, but more than likely it's going to come off of some of that negotiation power that you have. But at the end of the day, this keeps money in your pocket today instead of being financed over the 30 years. So your agent will go into this a little bit more for you. All right. So as you can see, without any assistance, you're probably going to be looking at between $12,000 and $15,000 when you add up your down payment and your closing costs. But like I said earlier, there are opportunities to drop that number big time through various loans, government programs, seller assistance, and everything else. Your lender and your agent is going to work on what's going to give you the best way to get in for as little money as possible. But there are costs involved. That doesn't mean to be discouraged. It just means you want to continue to save up while you're on your pursuit of purchasing your own home. Your agent and lender are going to try to get you in for as best that they can. But listen, even if you do qualify for down payment assistance, don't forget, you will still want to build up your funds for purchasing that house. You still are going to need about $3,000 to $5,000. Once again, this is to cover those inspections, the appraisal, any earnest money. But listen, when you buy the house, you might need some appliances or other things to help get the house ready for you. Maybe you need some furniture, whatever the case may be. So the best bet is to continue to save up what you can. Now, each of you has a unique situation. While each lender has government guidelines they need to follow, they also can work with many different unique situations. So don't despair. Let's get you connected with one of our preferred lenders and let's see what they can do for you. Listen, they want to help you have your dreams come true. Just make sure your lender and agent have a great relationship and they will work well together to get you the best deal that they possibly can. So now that you have all this information, it's time to move on to the next phase. So let's dive into our next module and discuss what it takes for you to find the right lender.